Hey, Mark Turcott here. I want to talk about the latest changes in the mortgage rules that came into play this week. A few things that jump out at me. One being, wow, it's going to make it that much tougher for anyone on the affordability end of purchasing a home in 2018. Here's the facts. There is a bench for really this. Let me back it up. Prior to these new rules, anyone that was getting mortgage financing through an insured product, Canadian Mortgage Housing Corp, Genworth, etc., had to qualify at a benchmark rate of 4.94, which is the benchmark rate for today. Even though the rates are, get 5-year fix, 299, 279 in that range, they still had to qualify at a higher rate to make sure that if rates rise, the affordability is there. They have passed on to those same rules onto people that are putting down more than 20% that don't require insurance premiums, default insurance premiums. In saying that, it's going to really, really erode affordability for people to get into this market and for people to trade up in this market as well. What I see happening is I see potentially people that qualified for 700 will say now may qualify for 6 and change. I didn't figure out the numbers. I'm just hypothetically speaking this way. I can potentially see in the higher range of price points and homes, possibly, again, this is a big possibility, we've got nothing to go on right now, declining. That's going to be tough. And on the other side, I see maybe homes in the more affordability ranges in this community, say 450 to say even 6. Remaining, higher in demand because the affordability range has been knocked down a few things. There are ways around this, and I really think lenders aren't going to sit back and take this lightly. I think they're going to come up with some new programs. One, increase amortization. This will offset a lot of things. Second point is the credit unions are not under the Federal Bank Act, so these rules don't apply to them. I really see a lot of growth for these credit unions out there today. Meridian, one of them, a super lender. I deal with a mortgage broker, and I called her up when these rules took effect, and she goes, credit unions are just going to get extremely busy now because they're not under the Federal Bank Act. So there's going to be ways around this. I just think we need to see how this is going to play out. I also think there is so much regulation coming down in this Ontario real estate market, from housing to mortgage. I don't get it. I just totally don't understand why there's so much push down in this. Yes, long term, I think some regulation is needed for sure for security of the marketplace on the lending side, both on the real estate side as well. But there's been so much. I think it's going to even slow down some demand long term. I hope it doesn't, but the reality is I think it will. Right now, it's very hard to get a gauge on this market from a perspective of where it's going. Great growth in September. October is going to be soft. What's going to happen in November, December? I don't know. I think people are going to sit in the sidelines a bit and see how things are going up. I hope I don't see the market slowly come down even more, but the potential risk of that, it's there. So in saying that, go to your credit unions. There's ways around this. Talk to your mortgage brokers. Got any questions, give me a call, 705-309-5300. Enjoy your day.